morning, ladies and gentlemen. A very warm welcome to you on Business Today Television. In our special show, Market Guru, we are now welcoming Mr. Mihir Vora, Chief Investment Officer at Trust Mutual Fund. Mihir has been a veteran of Dalal Street. He's worked with many other asset management companies and has navigated bull markets, bear markets, markets which have remained quiet for years and markets that have remained volatile for months together, and in all instances made supernormal money for his clients and his unit holders. A very warm welcome to you, Mihir, and what a wonderful time to be on Dalal Street these days. Fantastic rallies, 4 consecutive months of gains. We are knocking a record high on Nifty. Record highs on Fin Nifty and Bank Nifty have already been registered. Paint for us a picture of sentiment on Dalal Street.
Good morning, Shail. Thanks for having me on the show. And yes, it is good times, and especially I think the market is really comforted by the fact that in spite of having faced so many volatile events in the last couple of months, and forget 1 year, in the last 3 months we had a border situation, we had the tariff situation, and all those things the market has navigated so well that it is just increasing the confidence of the retail investor and global investors also, that the India macro story is more robust than what people have been expecting it to be, and it's also showing in the currency. You talked about 4 consecutive months of the markets rising. It is no coincidence that it is also backed by 4 consecutive months of FII buying. So the selling that we saw from September 24 to January, February has not only subsided but reversed, and now we are seeing 4 months of FII buying happening. So I think the backdrop is like this, I would say. The India macro continues to be much superior compared to the global macro. In terms of the debt to GDP, in terms of the fiscal deficit, in terms of inflation. We have inflation which is almost in line with the developed world. So inflation, the current account deficit, it may turn into surplus. In fact, the current account, the fiscal deficit is well under control. Our debt to GDP, India is amongst the very few countries which actually managed to reduce its debt to GDP in the last 10 years. So on the macro side, things are great. The government on the other side is on the same page with the RBI as the RBI, and this again I am seeing after a long time that both the government and RBI clearly sending out messages that we want to stimulate growth by making sure there is ample money available, by pushing banks to lend more. A complete reversal of stance that we saw last year. Last year also saw some slowdown in spending by the government. That's also come back in the last 3-4 months. We are seeing, very good spending happening by the government, and we are seeing some green shoots of the I would say private sector investment picking up also. So I think all in all, as long as urban consumption and rural consumption hold up, we are in for good times.
Okay. Mihir, we are also at the beginning of first quarter earnings, and all fund managers, chief investment officers such as you, are now waiting with bated breath for corporate India to catch up with the rally that has happened. In your own research team, what are the 2 or 3 sectors that you think will show outperformance in first quarter, and 1 or 2 sectors where you think you are circumspect with the kind of pricing that is there in the market, or the kind of earnings that are there in the pipeline?
Sure. So I think the government-linked spending sectors should do well, whether it's on the construction side, cap goods side, infra side, because as I said, the government has begun spending, so including defense, railways, etc. We should see good traction in the top line, and hopefully that should reflect into the bottom line. I'd say NBFCs can potentially show good numbers because a lot of NBFCs have books which are not floating or not floating very fast, and the liabilities are more repriced faster. So you might see some benefit of the lower interest rates and the high liquidity available in the system for certain NBFCs. For banks, it might be a mixed bag. You might see some volume growth in loans, but you also might see some margin compression. So that I would say will be a mixed bag. And in terms of uncertain results, I would say the FMCG pack, the global commodities pack, there are certain moving parts where we are not sure how the margins would be in this quarter because things have been all over the place, volatile commodity prices. So that's where we are not very sure how the margins would pan out.
Okay, so with these two backgrounds in mind, Mihir saying that sentiment is pretty strong on the Lal Street, and Q1 is likely to be at least better than Q3 or maybe Q4. What do you think of the broader market? Where are we headed in terms of Nifty? This is the only index that is yet to hit a record high. And your view on mid cap and small cap indices, are they fully valued or do we see further inputs?
Sure. So broadly, let's start with earnings expectations for the full year FY26. I would expect large cap earnings to be in the high single digits. The mid cap and small cap indices probably can grow at 14, 15, 16% earnings growth for FY26. So you can see that earnings growth is in general better in the mid and small caps. So I think that's the earnings base to start from. If you look at the valuation base, they are a little above average, but given that we are in a easy liquidity situation, and I expect the global liquidity situation also to be quite sanguine, I think a little above average valuations is par for the course, which means that we should be expecting market returns in line with the earnings growth. So maybe 13 to 16% returns from the small and mid cap indices, and a little more than single digit returns from the large cap indices. So I would expect in the normal circumstances, the markets to basically give you returns in line with the earnings expectations from this valuation base.
Okay, now let us focus on one of the products that has, just completed about, it was launched in November 2024. This is the Trust Mutual Fund Small Cap Fund. At the moment, the NAV is 10.54 rupees per unit, and the fund has an AUM of 970 crore rupees. We'll focus our discussion on this one, Mihir, from your stable. Very, very interesting set of holdings which are now appearing in front of you. I want to understand what is the logic that goes into choosing stocks as far as these are concerned. It's the earliest purchase for these funds would have been, say, December. These stocks would have been December 2024. So these are 6-8 month purchases which are doing amazingly well. For instance, BSE, MCX, both top performers in the NSE 500 year to date. What is the logic of choosing stocks in this one?
Sure. So our inherent investment philosophy is essentially looking at profit growth. So we are growth investors, and by growth we look at profit growth, and we also look at valuations. So growth at reasonable valuations. So that is our mantra. But within valuations, the way we look at valuations is also unique. Our terminal value investing approach essentially looks at not only earnings growth, but the length of the runway of growth. So for us, it is more important to understand and figure out whether the growth trajectory is going to last for a long time or is it only for the next few years. Because if the growth trajectory can last for a long time, then today's market cap will not be determined by the next few years of profit. It will be determined by the length of the runway of growth, which means that you might find that the value of the profits of the longer term is far more than the value of the profits of the near term, which is what we call terminal value. The terminal value is the value of the profits of the back-ended, beyond the foreseeable future. And you might optically feel that on next year's earnings, the stock is trading higher on PE, but that is because the market is paying a large amount for the future growth. So that perspective we keep in mind while choosing stocks, and a lot of the themes that are reflected in the portfolio are reflecting that long-term growth perspective.
Okay, let me just, ladies and gentlemen, talk about the top 5 stocks, and you will see a fabulous growth that has come into top 3. MCX, this is the top performer in the NSE 500. Let me just get you The month to date rally in terms of top gainers. Okay, year to date, MCX would be somewhere in the vicinity of okay, let's do solar industries, 73% higher. This is the second pick in terms of most weight, AUM based most weight in trust small cap fund. Let me just find out MCX. I'm very sure it is up 50-60% as well. Yes, MCX is right there in front of me. For yes, 43% higher. And what talk about BSE? BSE has also given phenomenal returns. BSE is up 50% year to date. Mihir, when you see these kind of rallies, are you tempted to book a partial profit or you let it run?
There is always a temptation, but as I said, with the terminal value perspective, we don't mind holding on if the valuations are looking a little expensive. If they look insanely expensive, then obviously we'll sell. But little expensive is par for the course when you are looking at the longer term growth prospects.
Okay, fair point. And one more interesting stock, ladies and gentlemen, is Gabriel India. I'll request the PCR to kindly fire the long-term chart of Gabriel India. This is somewhere lower down in the platform, in the holdings. 2% of AUM is into Gabriel India, and yet the stock has been at least this week's king. 220% circuits, and now somewhere at 950. Is the full value being explored for the moment in Gabriel India, Mihir, or there is a long time to go?
Sorry, Shail, I won't be able to comment on individual stocks. But as I said, we have bought most of the portfolio with a longer term perspective in mind. Sometimes there are events which kind of help you out in the shorter term
Okay.
also. But typically our view is for the longer term.
Yes. Okay, fair point. I get the drift. Now, in this small cap portfolio, Mihir, is there a sectoral logic, or is there just stock picking? Because I don't see a single private sector or a public sector bank in the top 10. The first bank that you have is Federal Bank, and I think that would be below top 10. What is the logic? You are not moving into what are popular sectors in the market.
Sure. So, financials, as you've been pointing out in the show, we have a lot of exposure to the capital markets team within the financials. And per se, if you look at the
Yes.
small cap index, it has fewer banks in terms of weightage and number also compared to the mid cap and small cap indices. So, if I were to look at the small cap index, it's mostly the small finance banks and microfinance banks, those kind of banks, where we like them, but very selectively. So, we are kind of being selective there. Most of our exposure is in the capital markets and those kind of segments, and some NBFCs.
Okay, fair point. The other question was the presence of maybe very few tech stocks. The only one that I see is Coforge. It's of course in the top 5, and of course has been a great wealth creator over the last 5 years or so. Any particular dislike that you have for IT?
So large cap IT, we are not that bullish on because even the companies themselves are only guiding for single digit growth. And it does not really excite us to be in those kind of stocks where the growth is only single digit. So that's why in IT we are very stock specific, very selective in our approach, and we have 2, 3, 4 names which basically have different business models or different set of clienteles, which enable them to grow faster than the industry, and which will enable to grow at least 15 to 20%. So that's our growth filter, and because of that, we are not too bullish on the IT services pack in general, but being very selective about stock picking.
Okay, fair point. So that's the broader small cap thought process that's going into Mihir's mind at Trust Mutual Fund. Mihir, this is again a long term portfolio that you've built keeping in mind terminal value? The reason why I ask is that typically small cap funds have very higher portfolio price to book, almost 6 times in your case, and the PE is a reasonable, maybe 35, 36 for the overall portfolio. Are you happy with these two parameters, or you wish they were lower?
No, I think that's by design. As I said, because a lot of our stocks will have high terminal value. If you look at the this year's PE or next year's PE, it will look high because a lot of the valuation is coming because of the longer term profit. So that's a characteristic of our own style.
Okay, fair point. Now, let's focus on the move ahead. Trust Mutual Fund is building its menu of offerings. I believe there is one more launch in the pipeline. This is a multi-cap fund.
Yes.
Okay, fine. And what's the logic of having a multi-cap fund when you already have a flexi-cap product? What's going to be the discerning difference between these two?
Sure. Very good question. In a flexi cap fund, there is no minimum or maximum cap on the market cap bucket that you can invest in. So you could theoretically be 100% large cap or 100% mid cap or 100% small cap. So there is no limit on any bucket. In the multi cap fund, there is a minimum requirement. The minimum requirement is minimum 25% in each cap bucket. So large, mid, and small, each of them has to have minimum 25% exposure. So I think the way it works is that it forces the fund manager to be a stock picker. It forces the fund manager to look at stocks even in the mid and small cap space. The the FlexiCap benchmark has 72% large cap, right? The NSE 500 is approximately 72% large cap, whereas the multi-cap benchmark is only 50% large cap, 25-25 is mid and small cap in the multi-cap benchmark. So to that extent, it's a better distribution of the market cap buckets. And in our view, what is also happening is that the importance of the mid and small cap category in terms of the relative size in the market has increased dramatically in the last 5-7 years. So to that extent, having 50% mid and small minimum exposure is bringing you closer to actually where the market opportunities are. You know, see, if you just step back and think, there are about 1100 stocks with a market cap of more than 2000. And if you remove 100 large caps and 250, 100 large caps and 150 mid caps from it, you're still left with over 800 stocks which are in the small cap category. So the choices in the mid and small cap category are very large. Mid and small cap as a percentage of market cap of stocks more than 2000 crores is almost 40%. So 40% of the market cap is almost in stocks which are mid and small cap in nature. So having a 25% minimum exposure to each category makes a lot of sense, because we have seen that in the past, the fund managers tend to become conservative in volatile times and increase the large cap exposure to 60, 70, 80%. In a multi-cap fund, what will happen is that you have minimum 25% in, say, in small caps. And if the market crashes and small caps underperform, the weightage goes below 25 and you are forced to top it up back to 25 or 25 plus, which means that you will actually be buying when small caps or mid caps have underperformed, which is actually the right thing to do rather than the other way around, which happens in volatile times. So that kind of,
Correct.
it's a forced discipline as we say.
Okay, now here is a trick question. What I want to ask is, will you be reinventing the wheel to try and find out newer small caps to invest it in the multi-cap fund, or you already have a small cap product, a mid cap product, a flexi cap product and a large cap product? उसमें से जो जो इनकी category में fit होंगे, you will buy that. What will be something new in the mid cap, in the multi-cap space?
No, certainly there will be, an overlap, not only versus our small cap fund, but also versus our own flexi cap fund, which is the first fund that we launched. Because the coverage universe for us as a fund house is about 200 to 250 stocks, right? So we typically end up selecting from those stocks. And obviously our best picks are already there in the funds. But having said that, the flexi cap fund has 60 stocks, the small cap fund has 60 stocks, right? And there is overlap. So, motamoti the new fund, which is the multi-cap fund, will also have to select from that universe itself. There may be a few new ideas, but there will certainly
Okay.
be a old one.
Okay, so the investable universe for the multi-cap fund will remain the 250 stocks. Am I right?
Correct.
The ones that
Correct.
you think are worthwhile.
Correct.
Okay, and obviously there might be some overlap, but there will be some new faces as well.
Certainly.
Okay, now
Because,
what is the
Sharon, what
logic
happens
of
is
these 250 stocks? Yeah, please
sorry.
continue.
Yeah, I'll explain the logic around 250 stocks also. But having said that, even in our existing funds, every month you see, 5, 10 stocks new, 5, 10 stocks exiting also, depending on the situation. So that new idea generation machine is always on, That's why you might see some new ideas in the multi-cap category also. So that was the, completion of that. How we select those 250 stocks is kind of interesting. As you know, there are about 5,000 stocks listed in the markets. And typically for us, the relevant market cap is 2,000 crores plus. So if you use that filter out of the 5,000 stocks, there are about 1,100 stocks with a market cap of more than 2,000 crores. Uh, Out of those 1,100 stocks, what we have done is that we've classified sectors and subsectors actually into what we consider, in our view, in our judgment, as higher growth potential and normal growth potential, right? Higher growth potential, when we say, we are talking about the longer term growth potential of that particular subsegment. So out of the 1,100 stocks, in our judgment, about 600 stocks fall in the higher growth potential subcategories. Okay, and those 600 stocks, when we filter down using management quality filters, past track record, ROE, ROC, cash flow generation over the longer term, those kind of subjective and quantitative filters. That's how we arrive at 250 stocks from the 600 stocks. And finally, the portfolio will reflect about 60 stocks from those 250 stocks.
Okay, so with that view on equities, let's shift focus on commodities, Mihir. This one won't have an allocation to precious metals or metals at all because it's multi-cap, not multi-asset.
It is multi-cap, not multi-asset. Correct.
So is there a multi-asset fund also coming?
It should in due course, yes, because that also has a following. People like the category, so we will introduce that in due course, of course.
Okay, wonderful. And my final question will be on your choice of silver versus gold. What would you prefer in this kind of an environment?
See, I think it's like mid cap versus small cap, or large cap versus mid cap. Gold will always be the leader. Silver tends to kind of follow after gold has done a bit. So right now we are seeing a situation where gold has done quite a lot and silver is trying to catch up. But I think if I were to take a longer term view, I'm bullish on both. Because the basic call is that given the debt situation in the US, they'll willingly have no choice but to go in for more money printing kind of an approach. Higher fiscal deficit, high debt levels basically means that you have to print your way, grow your way out of the problem, inflate your way out of the problem. And I think in that situation, you need to be in precious metals also apart from other asset classes like equities.
Okay. With that, Mihir, we'll call it a day. Thank you so much for your wonderful conversation discussing the small cap space and, of course, the broader markets and the new launch. Here's wishing you all the best. And let's hope for a great early Diwali on the Lal Street so that everybody rejoices this momentum which started from early March. Have a nice day.
Thank you so much, Shahid.
This, ladies and gentlemen, was Mr. Mihir Vora, Chief Investment Officer at Trust MF Mutual Fund. I hope you enjoyed the conversation as much as I did. We'll be back covering the markets shortly after this break. Do keep on watching Business Today Television. Thank you.